Hello, and welcome to this final episode of this practical series of preparing for recovery. This is the fourth episode, and I'm Jarrett-Kerr, and I'm a principal in Edge International Global Management Consultancy. In the previous three episodes, we looked at first steps to recovery, general topics of crisis management and financial resilience, some essential planning points, and the restoration of equilibrium. The second episode was very much more client-focused, and we looked at how we can interface with clients, and the third episode, how we can review practice areas for opportunities and threats and to build an action plan out of that. Now in this final episode, I want to look at the whole area of business planning in a changed world, how we can convert the work that we were doing into a business plan for critical times. And I'm going to do this in three ways. First of all, we need to review our operations and our resources to see whether or not we're sufficiently flexible and resilient to make the fresh start that's needed. Secondly, I want to suggest some ideas for bold but well thought out strategies for the future. And then I want to deal with 10, what I consider to be 10 essentials for a business plan in critical times. In doing this, I think we need, again, as I've said before, to learn the lessons from prior recessions. And as I mentioned before, I've been involved in two previous recessions. What I've learned from these is that firms did better if they were able to find ways of coping with the risk and heavily managing through that risk, taking the radical steps where necessary and responding quickly to opportunities. And the first thing that we need to do is to review our operations and resources to see whether or not we've got the necessary flexibility, resilience, and so on to make a fresh start. And again, may I refer you to the Edge International website at www.edge.ai, where there are quite a lot of written resources on the topics that you'll see on this slide. The first thing that is always good to carry out on a regular basis, and I think is an excellent thing to look at now, is to have an operational review. The objective of an operational review is to evaluate how effective we are as a firm, how efficient we are, and how our operational economics work. Now, if I have to put a bit of special pleading in here, it's that this is best done by an outsider. If you take a marketing department or an HR department or a financial department, it's difficult for them to review their own operations objectively. You need an objective assessment of the efficiency of each department. That builds into the need for a BCP, what's known as a business continuity plan, in order during a time of difficult time, whether it's a crisis or just a patchy period, to see whether or not the resilience can improve. You have to determine the sort of risks that your firm might face. We know this risk, which is a difficult and unusual risk, is something that nobody could have anticipated. It's what someone referred to as a black swan type of risk, an asymmetric risk. But we need to find a way of coping with asymmetric risks, as well as the normal ones of fire, flood, cyber attacks, partner going rogue, and whatever. And again, a business continuity plan you might need some help with, but you can start by looking at your operational review, and also your internal processes, such as IT for robustness and bandwidth. I've heard of quite a few firms that have remote access, have always had remote access for staff, but finding it difficult to cope when everyone's trying to get remote access at the same time, and it's having to be rationed so that people are allowed on the system for an hour or two and then they have to go off and let someone else on. The question to ask is, do you need to have the sort of bandwidth to enable everyone to access all the firm's databases, etc., all the time, or just some of the time? Some of the people, some of the time, or all of the people, all of the time? It's also good in terms of business continuity plan to review your quality systems. How do you maintain quality when you're not all in the same building, when the manager is having to overlook someone else's work from a distance? How resilient are you in terms of culture and transparency? What are the sort of things that you need to be looking at in terms of how to make yourself more agile, more able to cope? And do you have, as mentioned before, a crisis management team or the ability within your leadership to manage that, to manage during a crisis? That's all part of continuity management. But how do you build a culture of resilience? And what is a culture of resilience anyway? Cultural resilience is how able you are as a firm, without necessarily looking at the rule book, how able you are to adjust when the chips are down. To how quickly are you able to understand different situations, how those situations are evolving, what those impacts are likely to be that are emerging, and what risks are likely to occur. How good is your leadership at being transparent and visible and helping your employees to remain engaged and to remain empowered? And finally, how good are you at agile and collaborative working? So cultural resilience isn't just a systems thing. It's how good people are, what the way things are done around here, how people will automatically resolve into ways of doing things. In the very first episode, I mentioned the possibility of having a governance review, and this is something I've worked with a lot of firms about, how to change their partnership agreements or change the ways they do some things so that boards and management partners are empowered to do more, that important decisions are still reserved to the partnership, majority voting in some cases, and so on. The important point in a crisis is, how do you make these decisions faster? How do you delegate some of the responsibilities so that decisions can be made with less meetings, but of course more communication, more information? What is a better leadership model for your firm? These are all things that you can start working on now as we move into the next phase. So the second area that we need to think about in terms of planning for recovery is, are there some bold strategies that we can undertake? Some ways of taking some more severe and permanent steps instead of temporary adjustments. Now, one of those is to consider, when you're looking again at your budgets this year, a zero budgeting approach. And those of you who are members of the LMS will know that the Journal of the LMS Managing for Success has had a recent article by one of my partners on the subject of zero budgeting. So do have a look at that. Zero budgeting involves taking a fresh sheet of paper. It's oppositional to the current way that most firms work out a budget, which is that you look at last year's expenses or last year's revenue and you add a bit. Under a zero budgeting approach, you start as if you were starting a new firm. What revenues do you think we're likely to have? Start not looking at last year, but what do you think we're going to do? What expenses do we need? What fixed expenses do we need to have? What resources do we need? So a zero budgeting approach is that you might do alongside a typical budget, but certainly getting that concept into your mind is a good one to do. And then the third thing you might want to look at is some radical restructuring, making some fundamental changes which wouldn't have been politically possible in your firm during normal times. And I've mentioned 8 possibilities here. Obviously, the first one is, do we need all the offices we've got? Can we close one or two or more? Now, of course, that's a big decision, and there are leases and people and equipment, and it's not something you can do overnight. But in the long term, is this something, a decision we can make now to start work on that? Similarly, are there practices that can be hived off or eliminated if they're non-core or they're weaker? But just because we've always done them doesn't necessarily mean to say that we can have to do them for the future. Is there something that can be hived off? The third area is, can we actually boldly implement a bigger move towards better leverage, including through technology? Not ignoring people leverage, in other words, having more, a greater proportion of other staff to partners. And as I mentioned on a previous episode, the great danger is that we get rid of cheaper and less permanent resources while leaving the partnership cadre intact, and we then become over-partnered again, or even more over-partnered. And this gives rise to thinking about, do we need to think about some people who are underperforming, recidivists, people who are doing it all the time, who have always been underperforming, who have been under the microscope, who have been given objectives but have failed to achieve them, who have been given the final drink in the last chance saloon, or if they haven't been given the final drink, is now the time to give it to them. I'm not necessarily suggesting de-equitizing or terminating someone right now. I'm suggesting that work should start on being able to identify who those might be and building up to that in the long term. Do we need to shed unprofitable clients? Are there some clients who we retained through loyalty, who actually the time has come to say goodbye to? I mentioned closing offices, but do we need within our existing offices to find ways of reducing office space? If we have a lease that is within the last 2 or 3 years before it ends, can we start to have a conversation with our landlords about that, about a new deal? Can we sublet? What can we do in that connection? Do we need as big offices, as many offices as we have? Now, the seventh one is where a firm is in trouble, and we right at the first in the first part of the first episode, I mentioned a quote from an administrator who said that a firm being taken over from administration was an early indicator within the pandemic of more firms going to the wall, of having to go into pre-pack administration. Now, prior to that, is this the time for our firm to think, right, we actually need to back ourselves into a bigger firm? We've had overtures, we've always resisted it, we've wanted to retain our independence, but has now the time come for us to realise that we'll be better off being on a bigger, faster ship? Alternatively, is there a weaker competitor out there that we can either take over or take staff from? Do look at that one as well. These are all bold things that you could look at. And again, they're longer term issues that we want to make a start on now, perhaps, not necessarily something that you can achieve within days or hours. So now I'd like to spend the rest of the time looking at what I consider to be the 10 essentials for a business plan in critical times. And remember that your business plan needs to be compelling and coherent to your partners. It needs to be believable and understandable by all your staff. It may need to be produced to your bank or lending institution in support of whatever your credit lines or whatever you're going through there. But it needs to cover these items, whoever the audience is. Now, I'm not going to try and give you a template in this episode. There are plenty of templates around, and I prepared one for the law management section some years ago, which was in a booklet. I don't know whether that's still available, but if anybody wants templates, my email address will be on the final slide, and you can always email me for a template. So what I'm going to be talking about now is 10 things that I think are a priority in the business plan. And I bear in mind the work that has been done and mentioned in previous episodes at practice group level, with clients and with staff. And the first priority, I think, is to reset your revenue goals, but try to make the priorities fewer and bigger ones. Try to focus on the big ticket items. Secondly, and it's an obvious one, is looking at variable costs and discretionary expenditure. Which of these can be eliminated? Which can be deferred? The third is to create plans to restore depleted working capital. Now, we heard in the first interview, and it's a familiar topic, that firms actually don't carry enough cash in general for bad times. And working capital has always been an issue for law firms, where there's usually a mass of work in progress and unpaid invoices, where the firm is supported by partner accounts as well as by the banks. And what we're seeing with firms in order to restore depleted working capital as well as adjusting expenditure is asking our partners to put in more. Under the item of discretionary expenditure, I've heard of firms asking partners to take less by way of drawings and asking staff to accept a reduced pay for the time being. But under working capital, that's to say the capital we need to keep the business going, that'll have an effect. But we need to consider what are the longer term needs of the firm in terms of its capital base, in terms of its balance sheet. And do we have to get some more money from our partners in order to do that? An important part of that is cash flow forecasts. Now, I think the profession has moved from a time when hardly anybody had cash flow forecasts to a time now where cash flow forecasts are around in most firms. But I don't believe that even in good times they're looked at frequently enough. And they need to have bigger detail. We need to know when the bigger hits are coming by. And these will need adjusting with the different government help that's available to us and the different regime for and timetable for tax payments and so on. And it's important that work is done as a priority. The fifth item I've mentioned is that you could consider renegotiating any of your fixed costs that are possible to do so, rental and so on, professional indemnity maybe, I don't know whether it's possible to review those, but there may be fixed costs that you can have a discussion with your supplier about. And again, a consistent theme of mine, having written a book on it, is to actually double down on underperformance. Not necessarily to get rid of people, but to make sure that those who are performing less well are given the help and support to rehabilitate themselves, to work to revised objectives, to be supported in doing that, and to become better performers rather than average or below average performers. So that's 6 items. And let's move to the rest. The 7th item is there a different staff model that the firm can consider that is more flexible, more scalable, less reliant on expensive city space? We can continue to experiment with remote workforces. Is there something that can be outsourced? Can we delay hiring decisions or trainee contracts? I know long term is not a good thing to do, but in the short term, is this something that can be done? And more positively, are there some lateral hires, maybe from weaker firms, that we can hire to build our revenue and to take opportunities while the time is around? We need to have plans for client acceptance, for their retention and development, and we need to make sure that we carry out proper due diligence on both new clients and failing clients. I think many firms have lapsed into just doing the necessary money laundering checks, but do we always know who are going to be the good payers and who are going to be the bad payers? We need to know that, and we need to be able to prioritize clients who are on an upward curve. So basically point 8 comes down to looking at our database of clients and making sure that we harness the best clients for the best profitability. And it goes without saying that all this should be buttressed by clear, measurable objectives, clear metrics, good lines of accountability. And I think particularly while we're involved in remote working, performance management becomes an issue. Yes, it's good to be able to empower and trust our people to work from home, but that has to be balanced by the need to monitor them more efficiently and speedily and consistently. So those are 10 items. And the summary of this episode 4 is business planning in a changed world, to review our operations, operational reviews, business continuity planning, building a culture of resilience, reviewing our governance. Are there some well thought out, bold strategies that we can implement? Are there some things that we can make permanent? Can we do zero budgeting? Is there radical restructuring? And then finally, there are the 10 points that I've mentioned for a business plan in critical times. So that's the end of our 4 episodes. I hope you found them helpful. Do please email me if you want to make comments, ask me questions arising out of anything I've said, ask me for templates. Do look at the website www.edge.ai for further resources that you can rely on. But in the meantime, thank you so much for listening.